Hey guys, it's Crossroads here. Today I wanted to talk to you about hymns, hymns and hers, specifically ticker symbol hymns. They do have earnings on Monday, but I'm not going to really talk about that too much. This is actually going to be the least important earnings call that they have over the last year and over the next year, probably as well. It's always still important, but really what I wanted to hone in on is looking at hymns and looking at the bear case and also the bull case and what I'm seeing, why I'm invested in it, and it's a thesis that's a lot more than just a quarter. So, specifically, this is what we call a battleground stock, namely, that there are a lot of people that are very long and very bullish and see tremendous upside on HIMS. Some see a lot more upside than I see. They're talking about 1000x and things like that. But I see a pretty easy pathway for a 5x over the next 5 years. Could be wrong. I've been wrong before, but that's the way I'm looking at HIMS and also upside beyond that too. Now, as far as the price action, you can see over the year to date, it's up now 62%. And look how violent this is. At one point, we were at, I believe, actually in pre-market or post-market, hit $70. Here recently, we were down to 25 or so, actually a little bit under that in the pre and post-market. If you look at it over the last year, it's up a ridiculous 262%. And of course, it's not been out 5 years yet, but you can just see that it's a very, very volatile stock. So there's a lot of upside momentum right now, but also if we look at short interest, we can see that this is a heavily contested stock. This is what makes it a battleground stock, that there are bulls that are very bullish and there are bears that are very bearish. And you can see right here, along with the price action, you can see the short float percent in this chart and also the short ratio as well. And significantly, right here, you can see that the short float percent is about a third as of April 15th. Of course, these numbers are a little bit lagging of indicators, so that could have come down a little bit with its rise up to 40.82. Or they could have doubled down as well. Now we can look back here and see right here in January 31st that they actually hit about that same percentage, or actually slightly higher right now. And historically, HIMS has not been that shorted except for just a couple of times in isolation. That was a COVID short, by the way, that we saw there. So why is this significant? Well, we do see right here, this was definitely a short squeeze and shorts were covering. I am not in this stock for a short squeeze, although a short squeeze can certainly happen when you have this much interest on the long side and also on the short side in a very small float stock. And that's what you have with HIMS. So, it's 40.82. It would not shock me if this in the next 5 days, HIMS goes down to $20, or if it goes up to like $80. And that's absolutely wild and crazy. Now, more realistically, it's going to be somewhere in the middle, but that's a colossal middle. So the question is, you can see shorts are piling up on the short side. Longs are piling up on the long side. By the way, institutions are as well. It's not just a retail-driven stock. So who is right? What is the bull case? What is the bear case? Well, we need to look at a couple of things. And so one of those things that is a bear case argument, and we'll actually start there, is lawsuit. Now, HIMS is in an area that, of course, with the compounding facilities and pharmacies that they have to be very careful, simply just because there is a lot of legality. With the FDA, of course, there's a lot of scrutiny there. They've done very well, but it's an area that they have to be careful with. And in the medical field as well, they have medical professionals that ultimately are signing off on these prescriptions. So there's a lot of scrutiny already. Now, to add fuel to that fire from the bear thesis, they say that there's tremendous lawsuit risk, specifically with GLP-1 products. Now, why is that specifically? Well, it's because GLP-1 products have been, until very recently, on a shortage list from the FDA, which has meant that HIMS and other companies as well can compound these at leisure and sell them to the general public and profit from it immensely. The FDA has now removed semaglutide from the shortage list, and as a result, that revenue is drying up effectively in May. That's one of the reasons why this earnings call is not that important in the grand scheme of things, just because it's the full month of GLP-1 revenue. It's really not showing where they're heading in the near future. So the concern is that HIMS may continue to use the 503A pharmaceutical exception that basically is a provision that allows them to compound only for areas where there's a clinical or medical necessity. That's something like that they have an allergic reaction to whatever is normally in the medicine. Well, they can compound small batches, small doses for a very select number of individuals. And the concern that bears have is they say, well, HIMSS may go after this a lot more aggressively than that 503A actually indicated. And that's true. They actually have a point with Andrew Dudum, who is the CEO of HIMSS. He's referenced this a number of times. It seemed like that they took a step back from it right before the earnings call previously. But I do see that that bear thesis is weakening quite a bit. One of those things that we saw this last week, April 29th, is that Hims & Hers and Novo Nordisk are teaming up to expand affordable access to care. Now, this is not just Hims & Hers, but we also saw it with Roman, Life Medicine, LFMD, that they're also publicly traded. They're in a couple of others as well. So, but what this is really interesting and good for is, okay, you have a price here of 599 USD. That is more than Hims has been charging. It's going to be a much smaller product as far as margins, and I don't think it's going to be tremendous as far as revenue, but it's showing that Hims is willing to work with the establishment on deals like this, like other providers. And so at least with Novo Nordisk, not necessarily with Eli Lilly, it seems like that there's a lot less risk that they're just going to come out and sue Hims. They wouldn't have this kind of partnership otherwise. And so that alleviates some of the bear case. Now, I think Hims is still a small enough player at this point, and pharmacies are absolutely massive. I don't think that they're going to go after Hims unless Andrew Dudum does some sort of wild, crazy expansion of the 503A exception. And we haven't seen indication of that. There are hints here and there, but it seems like at least from the previous quarter's earnings call, that won't be the case. So second bear case argument is the aggressive guidance and GLP-1 revenue headwind. And so specifically, let's take a look at a couple of things. Here is the guidance specifically for 2025 from HIMSS. And they issued this guidance, by the way, after semaglutide, which is their GLP-1 product that they were compounding, came off the shortage list. So they had enough time to actually adjust this based on that headwind. And it is a headwind, although in the first quarter, they won't be filling that. And they'll have some of the revenue in the second quarter as well. Nevertheless, this is a very aggressive guidance. The bears are absolutely right on this. And so we see that here, the year-over-year growth is tremendous. A lot of that is GLP-1. But even the full year of 2025, they're looking at 56 to 63% year-over-year growth in terms of revenue. Here's the adjusted EBITDA growth as well. It's very aggressive, especially when you look at these themes right here. Weight loss revenue at least $725 million in 2025. That is a hard and challenging ask simply because this GLP-1 revenue, it's not all going away. They do have the 503A exceptions. They do have liraglutide that's coming out in the second half of the year, but frankly, that's not a very good product. They have their oral weight loss solution, which I think is very good, especially for the price that it's at. Price for effectiveness, it's a really good product. And so I think they're wanting to scale that. They have their nutrition line as well. And this partnership from Novo Nordisk. So can they reach that $725 million? Probably. But it's not going to be easy. They do guide aggressively. I will say this, though, to the bears, that not once has HIMSS failed to meet revenue expectations that they guided for in their entire existence as a publicly traded company. There was one time where they did have an EPS miss, but they've never missed on revenue ever. So I would be hesitant to doubt this yet. I think that this quarter will give us a good look and see if oral is really ramping up or if they're really going to be abusing that 503A privilege, and hopefully not, because I don't want to see that legislative risk. But that's the risk right there. Is it's an aggressive guidance, especially with a GLP-1 revenue headwind. And they did cite, and by the way, note that as far as GLP-1s, it was around, I believe, 20% of the revenue last year. It's a little bit disingenuous, though, simply because they weren't compounding and doing that at full scale for the full year. That was really a second half play. So keep that in mind. It is a headwind. Bears are right. It is an aggressive guide. Bears are also right, but they've never missed on revenue guidance. And they seem to know very well what products to ship when, who to partner with, who to acquire, and they do that extremely well. Now, the third bear argument is margins specifically. And this is one of those things that kind of builds off of the idea that HIMSS is shifting away from GLP-1s. And yes, we do see this partnership going back to it here with Novo Nordisk. That's exciting. But do you imagine that this is going to be a high margin product for Hims? No, I don't think so. They will make some off of it, certainly. But the issue is that the Bears are citing in here is these gross margins right here. Hims has actually guided, and they have guided out that they expect over the next, I believe, 5 years to have mid 70s% gross margin percent. And you can see sometimes they're higher. They may have some times where they're a bit lower, and we certainly can see that over the next few quarters. But overall, these are fantastic, actually ridiculous margins in this business. Now, one of the reasons why they're able to have such effective margins is they don't go after the insurance business. A lot of those are very low margin products. You have to deal with a lot of legalities. Insurance companies are just a bear to deal with, from what I understand. It's one of the reasons why a lot of telehealth companies that get into that really end up regretting it and even sometimes exiting afterwards. So Hims is just going after these products that have high margin. If we see more partnerships like the one with Novo Nordisk, that's great. It will help revenue. They will make some money off of it, but those margins will be cut somewhat. They may not end up hitting their guidance as far as gross margin. My perspective is it's kind of like with PayPal and Braintree, that Braintree is one of those things that's a lower margin product. And if it grows very fast, as long as it still is making you money on the bottom line, even if their take rate overall is a little bit lower, what does it really matter? And my perspective ultimately is that if they're making money off of the product, even if it does drag margins a little bit, I think that that's fine. Net, it's good as long as they are making that bottom line revenue. And this won't collapse their margins. I don't think it's going to be a product that is that extreme as far as the adoption rate. So the other bear market concern is tariffs. Tariffs is something that Donald Trump has mentioned specifically for pharmaceuticals a number of times, and yet we haven't really seen much in the way of tariffs come out for pharma or really any details. Now, a lot of the bulk ingredients and the APIs for pharmaceutical products are sourced in China and in India. It's either high 70s or low 80s%, depending on who you talk to. But that's a lot that we get overseas. And so if there are tariffs on APIs and on bulk ingredients for pharma, it will impact HIMS. But guess what? It won't just impact HIMS. It will impact their competition, which do not have the margins like HIMS. HIMS actually has a lot lower price products as well, just because of their structure. And as a result, that let's say they have something happen, tariffs hit, and they have to raise their prices by 40%. Take something like their oral weight loss solution, which sells at $69 a month. You multiply that by 40%, it's still an affordable product versus something like GLP-1s. If you add 40% to that, boy, it might be pricing out some folks. And I think that that's some of what we're going to see as far as a shift to the oral solution. So those are the three bear case arguments: the legislation product, the lawsuits rather, the aggressive guidance, especially for this year, and the GLP-1 headwind. But HIMS is a lot more than a weight loss story. Collapsing margins if they do scale some of these partnerships, and also tariffs themselves. And so the bear case seems to be continuously weakening. Previously, by the way, last year, the question was, is HIMS going to actually be able to sustain profitability? That has been answered very easily. They're not going to have to ramp marketing as much as they ramp revenue, even though there is a marketing expense to HIMS. Now, so what is the bull case? It's not just enough to look at the bear case, but what is the bull case? And we can start and look at a couple of things. So one is, we see HIMS market share is increasing and has continued to increase. This goes back to 2020, and these are a little bit hard to see, maybe impossible to see because I'm not seeing it show up here, but you can go on HIMS website, and each of these is broken out into a competitor. It's all shaded roughly the same, and you can see right here very clearly HIMS market share against these competitors just continues to grow and grow in terms of customers, and also in terms of observed sales, that they are ramping and taking TAM immensely. Now, this is also a place where HIMS is very good because they have a whole suite of products that are coming out, and they have the ability to just tap into a lot of that TAM. And so you can see some of the categories here: fertility, eczema, substance abuse, diabetes. They have a number of products that are actually coming out to address each of these. Probably the most exciting one to me is the oral testosterone solution. That does exist. It's already out there, but HIMS is absolutely the king of distribution. And they say that we believe that we have the ability to help over 100 million customers across specialties we serve. And this is just based on United States estimates right there. And so they say 90%, as much as 90% of applicable pop, as much as 90% of applicable population is yet to seek treatment in some conditions. There's a few reasons for that. One of those, of course, is cost, and HIMSS is there to help with that. But the other really is personalization and efficacy. They talk about retention rates, and one of those things that HIM does very well is connecting with individual consumers, not just on the marketing side, but also as you're beginning to take that product. If you have questions, if you have concerns, if you're not sure what you're doing, if it's just not working for you, they have support right there to be able to help you. So that's very good. That's very well done. And so they note that the TAM just here in the United States is 100 million consumers. Well, what about international? They did launch through acquisition into the United Kingdom, which of course is famous for the NHS. And we'll have to see how they scale there. But that's just kind of a toe in the water situation to see if that is potentially viable to scale their whole platform beyond just the United States. This is the best market for them to be in, but there's a lot of opportunity elsewhere as well. And I would not count them out on that at all. Now, as far as distribution, we can see right here what their platform looks like. And they talk about this, that they have data-driven personalized solutions. And that's helps them really be able to tap into the TAM, certainly with that untapped category of 100 million people that they have targeted, but also be able to retain those. And so they talk about awareness. A lot of people are aware of who HIMSS is. They have shelf presence. They have a very good marketing presence. They had a Super Bowl commercial, which it was for GLP-1s. Wrong timing on that, probably, but it did help as far as name recognition. You could see that in the growth as far as the members. The convenience we've talked about. And this right here is really key for understanding HIMSS is the subscription as far as to personalized solutions. That this means that they're getting not just off the shelf, one-for-one stuff that you could get from Roman or anyone else. In that case, like if you were looking for something like for ED or hair loss treatment or something, you'd say, okay, it's all the same out there. Who just gives me the lowest price? Instead, HIMSS is able to personalize a lot of their products. They're looking to continue to scale that out as well. And that really does give them an edge. So they have an immense TAM that they are able to tap into. They're growing their market share quite quickly, even though there's still significant TAM, even in the United States and also internationally. But beyond TAM, I think that they're really set up very well because of the personalization that we talked about. So let's look a little bit more into that. So we can see here, they talk about innovative offerings and services enable us to treat each customer differently because they are different. Now, bears out there will say, come on, they overstate their personalization. I think that they do a little bit, but some of these products are very well personalized. And this, frankly, is just a great tagline, is that they'll treat you differently as an actual human being because you are actually different. And that works really well. And they talk about it being personalized in 3 ways. So multi-condition offerings. This is something where you're like, hey, rather than take like 5 different medicines, I can just take 1 pill. That's awesome. That's amazing. And they can set that up for you, which is great. Personalized dosages. And this is all informed by MedMatch, their AI basically that's using their data algorithm that's specific to their customers. It helps them be able to figure out what's going to be the best treatment for you. One of those things that I didn't realize until maybe about 10 years ago is apparently those that have red hair are more sensitive to pain and also are less affected by pain blockers. And so anesthesia, for instance, it's one of the reasons why red-haired people hate the dentist. My dentist, he was old school. He did not recognize and see that red-haired people just need more anesthesia. And he was, I think he was in his 60s at the time, you know? And so I let him know, I was like, hey, there's actual studies that have been done on this. Check it out. He did, and he was informed. Imagine that across the whole medical industry, that you have a lot of very qualified, very wonderful men and women that are in the medical field, but they are just one person. And that's really where AI comes in. It can look at all of this data, all these publications, all these studies that are coming out, all these individual units, and recommend treatment, which of course a real human being needs to look at, but it can catch things that a normal human being cannot. So that is important as far as these personalized dosages. And they also note differentiated form factors. They don't have that for all of their products, but for many of them they do. If you like to do a chewable, if you like to do an oral solution, if you want to do a spray, if you want to do something different, they help you with that. Now, if you look here, you can actually see the revenue growth as far as subscribers and revenue as well. This right here is probably the most important slide to understand HIMS. Back here in 2023, early 2023 especially, you could say, okay, yeah, they have some personalization, but it's not really that much. And now more than half of their subscribers are personalized, and they continue to do so. Why is that so important for HIMS? It's because people are getting the individualized care that they need from him. So if I was getting one of those pills that cures three of my elements, and I'm not a HIMS customer, I'm not opposed to it. I don't take medicine with rare exception. But if I was doing that and I had a pill that covered three different things, it would be a lot harder for me as far as switching costs to figure out, okay, am I going to go after Roman or Life Med or something else? Because is a lot of competition out there, because you don't have a one-for-one match with the personalization that HIMS has been able to do for you. HIMS customers tend to be pretty happy with the products, depending on the product, of course, and very happy with the distribution as well. So this right here, the personalized aspect, that's very sticky. The non-personalized, that can be easily disrupted. And so it's key that they continue to grow that and scale that, and they certainly are as well. Now, the other thing that I think is very bullish for him is the long term, not just short term, is a bit of a virtuous cycle. A virtuous cycle basically is when one aspect or one area of your business is growing, or sometimes this is used for entire economies, then it fuels the growth in other segments as well, which in turn fuels the initial bit here. And so HIMS has that. They don't describe it this way, but that's essentially what it is the more subscribers that they have on the platform, that leads to additional insights as far as data. Here's that MedMatch. Data-driven personalized solutions continue to increase in scale, which leads to higher quality outcomes. Some of that is the customer service that they offer, but a lot of it just goes back to leveraging that data and providing that personalization. And of course, word of mouth gets around, and then people are like, hey, HIMS is actually working for you. Great. I'm going to check it out myself, which in turn, again, fuels deeper insights as far as data and so forth. So that really helps HIMS quite a bit. Now, not just on the HIMS ecosystem either. It also helps with partnerships. Going back to that slide that showed the number of subscribers that they had, we can see that they've continued to scale this out quite a bit. And I think that they will so over the next few years. For some reason, there we go. Yeah, it's loading right now. You can see whereas they were at 1.2 million previously, they're at 2.2 million just from quarter one to 2023 to quarter four. So all that growth in a little bit less than 2 years is fantastic. It's amazing. It's well done. And you can imagine as they continue to grow this number, we don't know where they're going to go in the future, although they certainly have talked about it. And it's a very aggressive guide. But let's say that they get into 10 million people that are users of HIMS at some point, mostly here in the United States, perhaps some in UK and elsewhere as well. When they approach people like Novo Nordisk and they say, hey, we'd love to partner with you and you can distribute your product across not just 2 million, but 10 million users. And we have MedMatch and all these other things built in-house. We'll take care of distribution. That is a lot more attractive and compelling than just a small little rinky-dink platform. That's what HIMS really is growing into, is this massive ecosystem that revolves around healthcare, that in times that they can partner with who they need to partner with, they can acquire whom they need to acquire, and they can continue to scale and innovate where they need to scale and innovate as well. It's one of the reasons why they've been so successful. So you have, of course, the TAM that's massive, and they've been able to meet and reach quite a bit of that, acceleratingly so. We have that level of personalization, which frankly is unmatched at this point, and it continues to scale out and give them a little bit deeper moat there. You have a virtuous cycle, and of course, it can lead to other partnerships, but is also great within the individual ecosystem. And then lastly, you can see their long-term vision. They say that our long-term vision focuses on elevating subscribers' experience through combining AI with data insights and existing platform capabilities. So from diagnostics to the personalization, of course, the care team as well. It is a platform, and this part is really interesting right here. It says eventually, not right now, but this is long term, eventually these capabilities can be exported to the broader healthcare ecosystem, expanding access to care and creating new opportunities for monetization right there. That's exciting. As a long-term shareholder, they have done very well in isolating and identifying acquisitions that will help them grow and reach their TAM. And they've done a great job of being able to identify and isolate products that will really help scale and grow this ecosystem. They've driven shareholder value very, very well. They are very profitable, growing fast. The bear cases, I think, have continued to weaken for the most part. There is some risk, there is some truth there. It's not completely ridiculous what bears are saying. This is not a play that I'm seeing as 1,000x or anything like that, but I think a pretty easy 5x over the next 5 years for myself. That's how I see it. With the short interest there, of course, it could hit that a lot further and quicker, in which case I'll tend to take a little bit off the table. This is a very volatile stock. It's not for everybody. But what I would encourage you to do is if you're interested in this play, if you are thinking, maybe you could get into some hymns, buy the stock, whether you're sure about it here or not, take some time, do some digging into it, see if the bear case has more merit for you, or perhaps the bull case, or figure out what price that you're happy to buy and hold hymns for. It's not for everybody, but I think it is a fantastic opportunity that is going to continue to excel and compound year after year, driving shareholder return. So let me know what you think in the comments. Is this a stock that you're already in, you're looking to continue to have for the long term? Is it one of those that's been on the radar for a little while and you've never pulled the trigger? I'm kind of curious what would cause you to pull the trigger. Or are you on the other side? You're saying, you know what? I think the bear case is getting stronger. Maybe I need to look for the exits. Any of those are fair. Nobody knows the future here. I don't own a crystal ball, at least yet. I want to get one of those in the future, but right now I just don't have one of those. Anyway, thank you for watching, commenting, and subscribing. And until next time, happy investing.